Welcome to your Global Markets Wrap-Up, where we break down the key trends shaping the financial world. Today, we're taking a look at how global stock markets, currencies, and commodities have moved, and what factors are influencing investors around the world. Equity markets around the world showed mixed performance today. U.S. indices closed slightly higher, with the S&P 500 gaining 0.4%, while the Dow Jones Industrial Average added 0.3%. Tech stocks led the rally, buoyed by strong earnings reports and renewed investor confidence in AI and semiconductor sectors. Meanwhile, Nasdaq ticked up by 0.6%, reflecting continued optimism in technology and cloud computing. Equity markets around the world showed mixed performance today. U.S. indices closed slightly higher, with the S&P 500 gaining 0.4%, while the Dow Jones Industrial Average added 0.3%. Tech stocks led the rally, buoyed by strong earnings reports and renewed investor confidence in AI and semiconductor sectors. Meanwhile, Nasdaq ticked up by 0.6%, reflecting continued optimism in technology and cloud computing. In Europe, markets struggled to find direction. The FTSE 100 in London was flat, while Germany's DAX slipped by 0.2%, weighed down by concerns over rising energy prices and slowing industrial production. Analysts point to mixed economic data from the Eurozone, with inflation showing signs of easing but consumer confidence remaining fragile. Over in Asia, the Shanghai Composite rose by 0.5%, driven by gains in technology and clean energy stocks, while Tokyo's Nikkei 225 edged down 0.1%. Investors are keeping a close eye on China's policy signals, including potential stimulus measures, as well as ongoing tensions with the U.S. over trade and technology restrictions. Commodities saw significant movements today. Oil prices climbed, with Brent crude up 1.2% to $88 per barrel and WTI crude rising 1%. Traders are reacting to renewed supply concerns from the Middle East, coupled with expectations of stronger global demand heading into the final quarter of the year. Gold, often seen as a safe haven asset, fell slightly by 0.3% amid a stronger U.S. dollar and rising Treasury yields. The foreign exchange market also saw notable activity. The U.S. dollar strengthened against most major currencies, with the euro down 0.4% and the yen weakening 0.5% against the greenback. Investors are pricing in the potential for higher U.S. interest rates as inflation data remains resilient. Emerging market currencies such as the Brazilian real and the Indian rupee also faced pressure from the stronger dollar. Geopolitical developments continue to play a key role in market sentiment. Investors are closely monitoring U.S.-China relations, especially regarding trade negotiations and technology restrictions. Meanwhile, uncertainty surrounding energy policies in Europe and potential interest rate moves from central banks in the U.S. and Europe are influencing both equities and bond markets. Analysts warn that even minor political or economic shifts can create significant volatility in today's interconnected financial system.
Markets are in a cautious mood. On one hand, corporate earnings in the U.S. are beating expectations, particularly in tech and industrial sectors. On the other hand, macroeconomic data from Europe and Asia shows mixed signals, and that's creating a backdrop of uncertainty. Investors are balancing optimism over earnings against concerns over global growth and interest rate policies.
Looking at the week overall, U.S. stocks have been relatively resilient, despite volatility in European and Asian markets. Oil and energy commodities are trending higher, while gold and other safe haven assets have slightly retreated. The currency markets are dominated by a stronger U.S. dollar, putting pressure on emerging markets and commodity-linked currencies. To sum up, investors are navigating a complex environment where earnings optimism, geopolitical tension, and central bank policies are all intersecting. Market watchers advise a balanced approach, keeping an eye on both short-term volatility and long-term trends. For now, cautious optimism seems to be the theme across global markets. That's it for today's Global Markets Wrap-Up. Stay tuned as we continue to monitor developments in stocks, commodities, currencies, and global economic policies. I'm Narrator Name, and we'll see you next time.